Welcome everybody. This is our third live trading session, so we've tried to do these as often as possible. It's pretty much been a daily thing for the past 3 days. If you're enjoying them so far, then we may be able to just make them daily throughout the week. So if that is something that sounds good to you, make sure you let us know and we will do our best to make that happen. So let's jump straight in. So at the end of the stream yesterday, to anybody who either was live in the stream or is watching it back on YouTube at any point, we were looking at this market, the US dollar to the yen, and I was basically showing us how we could have looked to tackle buy positions on this market using our higher time frame bias and higher time frame point of interest, and then after we have that tap in a higher time frame point of interest, how we can then look to execute a trade. That's exactly what we got in there, which ended up being a 30-to-1 RR trade, and I was stating that I showed you where I would look to partial, and if the trade is to play out, we would have been looking at about 12.75 RR returns. I usually risk 1%, so that is looking at 12.75% back off one trade, so definitely very high. And as I was stating, we could afford to lose 12 trades if this one was a winner and still be up. Let's look at the chat. Ryan, welcome in. Check out Euro to Australian dollar. I will do that in just a moment. Tell me your thoughts. Recently hit a good zone and could be a potential reverse. Okay. I'm just going to quickly run through what I saw in here, and then I'll jump straight over to the Euro to Australian dollar and see what that says. So I'm going to replay price back for reference. Check out the last maybe 5 to 10 minutes of the previous live trading session. I was watching the live market, and at the end I said, look, I'll leave you all with my prediction for price moving forward. That is when price was up here. So if we replay that back, we were sort of around this region. I saw that price was getting rejected. We were seeming to have a reversal in the market. I said, look, we have two zones that price is going to react from. Either this higher one or this one down here, and as the stream was ending, we see that price blew through the first zone, tapped us into the second, and once we had that tap, we could have either had a pending order set on here, or I said, look, let's go to the lower time frames. We have a last sell to buy in here. I'm going to set a pending order at this region, and just if price taps in, we'll take the trade from that and look to profit from it. So this is what I left everybody on at the end of last stream, and you'll see that price eventually does tap. Let's speed that up slightly. There we go. We get a very nice tap. We're able to get a 1.2 pip stop loss on this, and then you'll see from here the price takes off and exceeds the final target that would have been the previous high in the market. Do this session daily, it helps all of us. Yes, I'm definitely thinking of doing that, and the best part about it is that if anybody can't make it in the live session at the time that it is live, then they are being saved over onto our YouTube channel. So we're going to have a playlist of all of these live sessions, so anybody who wants to do some research and practicing can just go over onto the channel anytime and re-watch these live streams and watch how we are tackling the markets live, which I think is a very good opportunity. And then eventually we'll see that price does, there we go, blows through the take profit, and there we have a 14.5 to 1 RR return trade. We could have looked to partial at this high, however I was busy at the time, so it did just end up running. Brilliant trade this, James. I managed to profit from the move. That's perfect. It's exactly what we want from these sessions. We want you to all be able to profit alongside us. Regardless, Ryan, you wanted me to check out Euro to the Australian dollar, so let's head over to that now. I don't think I've analysed this market in a very long time. There's either going to be no analysis on it or some analysis from a very long time ago. It appears I do not have anything. Right, so let's do a top down. Okay, so we've had this break of structure, assuming that we're now bearish. this would have been an impulsive wave down. It seems like price has traded back up, wicked us in to, there's some region where we have, let's just zoom in, it's very hard to see. This wick here, up to this wick, is the last buy to sell in my eyes. Let's see if price reacts perfectly to this, as I hope it does. Yep, perfectly wicks in. Straight afterwards we introduced a lot of supply, which has instantly pushed the market back down. Now there is one thing that we want to be cautious of, is that we are technically still bullish on this time frame until we get this displacement, because if we follow the structure in here, we've had impulse, retrace, impulse, retrace. So we could argue that we have buy opportunities from this candle, although that is going against our overall bias, our overall trend. So although it's more likely that price taps through this zone and displaces the market, we should also be cautious because we haven't delivered on this time frame the fact that we have turned bearish. So we're just keeping an eye out on that. And as we move lower, we can just see what price does. But yeah, I think that's pretty much what we're looking at. We'll change this to a demand zone. Point of interest demand. Okay, let's now go down to weekly and just watch price action as we've traded down. So obviously this was very high volume. So I had impulse down, correctional wave, impulse, correction. And then this entire move is impulse because the initial move down does not exceed the low. So this itself is not classed as impulse, rather the whole move is. I like the idea that this last buy to sell is perfectly mitigated in the move. As a point of interest. So that's quite nice. Now moving lower. It seems like I'm going to have to just go down to daily just to be able to view the structure better. Okay, so in this region, arguably I'm saying that we probably have positions either in here that we want to mitigate, or potentially all the way up here. So those are definitely two zones that we can watch in terms of mitigations. And the reason I'm saying that is because looking at the fractal structure, we have actually displaced this high, which would appear that we are now looking to go long after just tapping into this zone as well. So it's a chance that this zone has introduced demand, although it might not be enough demand to completely take us up to the previous high. It could still just be enough demand to trade us into one of these zones. So displacement, price is perfectly traded back down into the last sell to buy, where it has since reversed. So we see a tap into that. So this would have been an impulsive wave. That our point of interest that was tapped. Oops. So now we have the expectation that price is at least going to trade us up, surpass his final target, potentially then take another correctional wave and keep trading us up. Now I'm just wanting to make sure in myself that this zone, yeah, so this right here to me is our last buy to sell, right in there. So that is the main zone I'll be looking at. However, if price does exceed this, as we can see, there's a lot of efficient structure, a lot of wicks coming back to mitigate any unmitigated positions that were remaining. The only other spot that I can see is all the way at the top here, where we had the major buy to sell. Although it's unlikely for price to trade all the way up to this point, this is the more likely zone I'd be looking at. Although if we do blow through this, that would be a zone to look at. Regardless, let's go down to a 4 hour and look inside of this. Yeah, so we had a perfect mitigation of the last buy to sell that we identified on this higher time frame. We've now had a displacement of this high, so we're definitely trading bullish from this level. making that assumption, we could say that we can now look to take trades to at least this high. If not, we could just partial and look to take the trades up to here. As a result, is there anywhere that we could look to go bullish from? So that needs to be a demand zone. This to me is acting like a zone that we could look to take trades from. I think that wick does it, although that is a very refined zone. Just to keep it unrefined, I'd say anywhere within this region. And then now to identify something in here, let's go slightly lower. There's no clear region to me. I think that wick does actually come to tap into here, which potentially mitigates the zone. However, there is an unrefined position here. A refined position here that price potentially hasn't fully tapped into. So to me, I believe those are the two likely zones that we could look to buy to. And then just imagining price traded us back down to here. We'd have a nice buy position just because we'd be able to go long from this zone. Stop loss here. Take profit all the way up at this point, which still gives us a 8.8 to 1. Ideally, we'd look to be able to refine entries after price taps into there. But that is what we're looking at. So we'll place our first alert down at this zone, which we're looking at 1.485. I believe that's right on the zone, yeah. And then we'll place our other one at this level, which is 1.4695. What I am going to do is, because I'm always struggling to see those numbers, I believe you can change the interface scale. Appearance, no, I don't think it's there. I believe. Zoom, there we go. Zoom in. Does that help? I can't tell whether that's made them bigger or not, but let's just pretend it has. So only look for buys in this market as a displacement occurred to the upside. I hope that hasn't like messed with. Let me zoom out one. That's definitely way too much. There we go. Sorry, give me a second, Ryan. So yeah, after we've had this displacement, I'm expecting us to now be bullish into a supply zone. Following the higher time frame bias we gained, which from the monthly is the fact that we do want price to trade lower and exceed this displacement at least. But if we go higher, more than likely the fact that we want price to exceed this low as a final target in order to continue the bearishness. So overall, we are expecting price to be bearish longer term, and ideally we're expecting price to run all of this liquidity to get to this final target. However, as we went lower, we identified the fact that we might have a potential area here which isn't going to invalidate the bearishness, but is or does have the chance to bring us demand into the market. It seems to have done that perfectly, because as price traded to it, we see that price has some slight rejection, not as much supply in the market, and we then had this displacement. After having that displacement, price then perfectly traded us into a demand zone, showed rejection from that. So that is confirmation for me, or enough confirmation that price is going to now trade bullish. We are at least hopefully going to exceed this final target, but my expectation is for price to potentially come and mitigate this zone here. So my argument is we are going to be bullish until we mitigate this zone. We're then going to watch what price does in this zone, potentially find enough supply to take us lower. If not, price may blow through and we'll look to change the bias from there. NFP news in 7 minutes. What are my thoughts? We're just going to let it come out, let the market settle before we even look to take trades. So at the moment, we're just going to be analysing the markets and also looking to prepare for any trades we might want to take after the NFP. Until getting to higher up and make it. Yeah, Brian, that's spot Kyoto, hi James, hope you're well. Glad you're streaming again. Yeah, perfect. Welcome back, Kyoto. I'm glad that you are enjoying them. It's good to see you back for the third day in a row. I hope you've been able to learn quite a lot. That is ideally what I want to do here, is just give over as much information as possible whilst also giving you my outlook on some markets. So if current higher lows got broke, would you then be back to bearish? So let's say, for example, you mean that if this low here was broke, yes, I would then go back to bearish. But if this low was broken, so as of right now, this is a protected low, and this will be the protected low until the final target is met. So until this level is exceeded, this level is a protected low. So if we were to first, let me get brush tool out. If we were to first blow through this, the second we blow through this level, this then becomes a protected low. So after blowing through this level, if we then traded through that, I'd be back to bearish and potentially look to take sales from a supply zone like so, and so on and so forth. However, if we were to do something like this, and we were not to exceed the final target, but we were to break the low there, that to me is not a displacement, that is not a reversal in the market, because we're still within the correctional wave of this impulse. And we could come lower to mitigate a zone potentially somewhere in here, and then go higher, which is why I wouldn't look to go bearish after we broke that. However, if we did actually see price do that, traders through this, then yes, I would go back to bearish. I hope that makes sense. I managed to get in on that trade you left us with yesterday. Oh yeah, the US dollar yen. That was a very, very good trade. I was hoping that people would be able to profit from that. So I'm glad that you were able to as well. I believe, as we were saying, it was a 14-to-1 RR return, unless any partials were taken, which definitely could have been the case. Ryan, that was a beautiful trade. Yeah, it was very, very good. I'm very glad we were able to get in on that. Also, anybody who has been liking this live stream, thank you. That's 6 likes now. So thank you to everyone who is enjoying that. So you reacted from a zone, then created a new zone from that move, waiting for price to get back to it. Yeah, yeah, pretty much. So we had price tap in, and in order to confirm that we were reversing in that zone, we waited for a fractal displacement. After we got the fractal displacement, we then identified a fractal demand zone, and I said we can look to have a pending order here, because the fractal displacement alone was confirmation of the reversal, but having the pending order in that demand zone just allowed us to refine that stop loss, and I think we got it down to a 1.2 pip. I risked 2% and had an SL of 2 pips, so made 14% back. Wow, that's crazy. The fact that you can make 14% from one trade alone, it is absolutely crazy. And that is the amazing thing about the smart money concept approach. Zones with zones, yeah. That is the downside to this strategy, is that it's very, very confusing trying to keep up with all of that stuff. But after so long, it just becomes muscle memory. It just becomes second nature. So, yeah. Right, let's take a look and see what happens with the fundamental news. So, usually we have to... No, we haven't got the NFP yet. So, it seems for the CAD, we have some fairly worse than expected news here. So, we could see the CAD depreciate as we sip our coffee. We might have to wait another minute or two. Okay, so that's worse than expected for unemployment rates. Just waiting on the NFP. Oh, it's not going to do this to us, is it? Great. Who was the guy's name you mentioned the other night who you learned a few things from? LAGFX. That is the original person that I got into with this strategy. I believe I watched a couple of things from a person named Pips of Persia. However, LAGFX was the main person that I learned from. And I just watched his YouTube videos. I never bought his mentorship. I just watched his YouTube videos. Coffee is life, yeah, coffee. Coffee is definitely an amazing thing. Let's see if this has... Okay, there we go, better than expected for the NFP. Now, we have these results. The NFP being the most respected one. We got better than expected. Let's go over and see what that is doing in the market. So, let's head over. Let's go down the time frames. Did not think that I had the brush tool still on. So it seems like price is coming down. We could get an alert on that very soon. Let's just head over to the Euro to the US. Wow, yeah, we're already seeing a big wick. And that right there, ladies and gentlemen, is fundamental news for you. What's likely to happen is price is going to be rather volatile for the next 10-15 minutes. Price will then spend some time stabilizing, and then after we have stabilized, we may then be able to look to take some trades. When did this happen? Oh, yesterday. These are outdated. That's quite nice though. I haven't actually done some proper analysis on this in a while, but seeing the volatility in this move, a very quick push up, and then just the fact that price held in this region for such a little amount of time, to me does show some institutional control, and it appears that what we have done in that region is tapped it. Actually draw this out, and we've had a clear distribution in the market there. I wonder if there were any trading opportunities within this. So we've had the distribution. We had price perfectly tap into this sell to buy, where we then exceeded the final target. So we would be expecting this as a protected low. The second we then broke this protected low, we could look inside of this and say that we have two unmitigated regions, being this. So let me actually highlight this as an impulsive wave, so it's a bit more obvious what I'm looking at and what I'm doing. This being the impulsive wave, which comes to displace what should have been a protected low. So displacement, put that there. So I would say that zone, and then also this zone, as it's a buy to sell with market inefficiency. And then we could have got involved. If we take that right to the top, we could have got involved in the market there had we had a pending order. If not, let's actually replay price back and see if there was any entry confirmation throughout that region on even lower time frames. Okay, so we've had the tap, we've had a move lower, so we've set a low in the market. Price fails to create a new high. Early signs that we are ready to reverse from there. Already the fact that we are getting rejection from this zone is good. We're sort of consolidating in the region. We know that demand is being absorbed. That is a good sign. So given the fact that we've got such a good sign here, we could have argued that the second we're given a displacement, so right at this region, we could have looked to enter with a stop just above and then look to ride price down. And this is where it may get difficult, because looking at price, we could argue that we'd want the low in the market exceeded to all the way down here. And then let me look if there's anywhere that I did not mean to go to a 3 minute. Anywhere in the market that I would look to partial. Okay, so we've got an unmitigated position in here. I would potentially be watching price as it gets to this level, for the fact that demand could get introduced. Yeah, so LAGFX is a YouTube channel. He's actually blown up a lot, and his purpose is to just try and teach people the smart money concept strategy. He's very good at it. He's done it for, I think he's been trading for 10 years. I think he said that he had a mentor for maybe 4 of those years, and of the other 6 obviously was just practice and time. And he's now set up a YouTube to try and give back, and I simply used his videos to learn. So anyway, back to what I was saying. I probably would have looked to take a partial potentially at this region at 8 pips, so that is 1.5 RR, and that we potentially would have partialed. Maybe you wouldn't have seen that zone. Another area I potentially would have looked to partial at, another unmitigated position here, so potentially look to partial at that region. And then as we go lower, potential demand zone in there. If not, we would just look to trade price to the final target. Now, I believe with the NFP, this trade would have been taken out before a take profit hit. However, let us just play this out now, put it as quickly as possible, and just see what would happen. So already we know price potentially would have hit a partial that we would have taken. Now let's see how it trades from here. Moving down with very high volatility. I'm just curious to see if it hits our second partial before, because we already know a stop loss, or a stop loss at entry would have been hit. Okay, so there we go. That's where it happens. This is where the NFP fundamentalists come out. It appears that price was okay literally until half past. So the second that news was released, that's what blew the market up, which is why we have to be careful. And it's a great example of why trading around the NFP is so unwise. It's just not wise, because everything can be going perfect with the trade. We can look to see this as a correctional wave. We start to move lower after displacing, and then all of a sudden the volatility just blows us out. So that is why you have to be careful, and is why trading around fundamentals is not advised, just because stuff like that can happen. But is an example of how we could have got involved on that trade. I just wanted to show you this because I know when I first started on this strategy, the hardest part was, yes, I understand how to analyze and view the markets, but actually getting involved on trades is where it's difficult. So I just wanted to answer that question. Had the NFP not come out, potentially we would have traded lower. But that is that. Is it safest to allow displacement from the lowest low like you just did? Yeah, it is always the best idea, because this strategy is always looking at taps from points of interest, typically a supply demand zone. We're pretty much always looking at entering in on a reversal. So I'm never going to get involved in a position until we have confirmation that the reversal is happening, and a displacement is the best sign that a reversal is highly likely to happen. Now we can get involved straight after displacements, like I said we could have done here, or we could have done the second we saw the displacement of that low. We could have had a short position the second we did that, with a stop loss above the what should be a protected high, take profit all the way down at the final target we spoke about before. However, it doesn't give us a very refined stop loss. However, if you're not too bothered about refined stop losses, it's no biggie. But what I like to do is then once we've got the displacement, I then use my 3-box strategy on fractal structure. So take the impulsive wave, wait for a mitigation, and as you see we took a 16 pip stop loss down to a 5. Yeah, I hope that answers the question there. But yeah, you do kind of have 2 options on how to tackle entry confirmation, and this is where I say that every single strategy is different. You can specialize that strategy to what you'd like to do, how you'd like to trade. I may be very I definitely am greedy with trades at times, where I'm always looking for more refined entries. I'm always looking to get those tighter stop losses, in order to get higher returns, but you have to understand that the further we want to refine. So let's say, for example, price could do this. It could have given us a sign. We could have got involved, but then price may decide, okay, I want to actually mitigate the higher zone, so we've already taken a loss here. Then let's say we get an entry on here, and then we run, but we've already taken one loss. However, because we can refine the stop loss, that loss is usually mitigated by the fact that we've got such a high RR return. But then the other thing to be cautious about is that sometimes after we tap a higher time frame point of interest, we can usually introduce, so in this case, that much supply that we just never get a real retracement to get involved with. So we could literally have seen price tap, give us this distribution, and then just fall, and just not give us any region where an entry could be found or could be valid. So sometimes trying to over refine can shoot you in the foot, so you just got to weigh the pros and cons and find what works for you. Luke's quite good when it comes to less refined entries. He's a god. Yes, Luke catches some amazing trades. He's been doing it for that long that it's just like the sixth sense. He sees some price action in the market, he predicts what's going to happen, and more often than not, it plays out exactly like Luke Christ, I heard his name was. Yes, I believe that is very fitting. But I think one thing that me and Luke always agree on is that the most important thing within any strategy is the deep and advanced understanding of structure and structural laws and how the market structure and price action typically plays out. So you can sort of teach yourself the laws, teach yourself how structure usually plays out. However, a lot of it is just time in the market and understanding what usually happens when we see certain structure and certain price action. Okay, so what has also happened, I've just seen my phone notification, we've had a euro to Australian dollar tap. So let's head back over to that market and see what happened. LAGFX. Structure is everything in the world of Forex. Indicators, lines, and everything else comes after. Yeah, 100%. I'm just listening to you explain Euro to Australian was more advanced than where my brain's currently at. Yeah, and the best part is that I can fully relate because I've been exactly where you are, and I remember watching LAGFX, for example, and he'd just run through a market so quickly and say all this stuff that he wants to happen, and then it would play out, and it's just like so much to take in. So if you need me to slow down at all, just let me know, because I do get a bit carried away and just run through my analysis quite quickly. If you need me to explain anything else more in depth, again, just feel free to ask. But regardless, I want to see how price has played out since the NFP. Yeah, just traded down. So literally, this is what can happen. Price can just have a sharp shot up in the market due to fundamentals, and now price is ready to just continue lower. And it's more likely than not that we'll see price now just trade us down and exceed that final target. But one thing to note is that even though fundamentals do send the market mad, it has still respected the protected high and respected this supply zone we drew out. So had we missed an entry there and we had a pending alert here, in the last 15 minutes, 10-15 minutes, we'd already be 23 pips in profit. So although fundamentals can seem wild and scary, not always, but more often than not, they do still actually follow some structural laws and some laws of the market. Anyway, we said we go back to Euro Aussie. Euro Australian, I believe this is the market we analysed. So, okay, we're holding in that initial zone that I highlighted. Let me just view on a 15-second. This is quite nice. We set this as a fractal protected high. Since we broke this low, this becomes a fractal protected high. We see price then exceeded that, where we could have taken this as the last sell to buy. We see price taps in, rejects, exceeds this, so puts in a new higher high. Again, we see this wick, which acts as a sell to buy. Price perfectly taps into that, reacts, moves higher. However, this is fractal structure, and this fractal structure may have the purpose of being bullish just to come and mitigate something in here. So until we have a higher time frame displacement, which I'm going to go into a higher time frame, I'm going to argue that if we exceed this high, that is displacement on the higher time frames, which we need in order to look to go bullish. So this is one thing not to get too caught up on, is getting too caught up fractally. Now, we could have seen this displacement and started getting involved in buy positions, which said we got in on this position here. Yes, we probably would have already been profitable, because we could have even just taken that trade, a 2-to-1, and have profited. If not, we could have said, right, well, where is a supply zone? This. So we maybe would have looked partial here, and then look to run that to the final target. So if we are going to get involved in fractal structure like this, it's less likely to play out, but if we have good risk management, so as I said, yes, we could be bullish for a shorter period of time, but we could have just been bullish to this region. So we could have looked to partial here at a 2-to-1, and then once we saw that price blew through this, we could have said, right, you know what, maybe we'll actually take this take profit all the way to the final target higher, up to here. So that is how we could have tackled the market. We'll see if price plays. As I stated, I would have looked to have partialed somewhere in this region, which I believe was a 2-to-1. So we would have actually taken 1 RR back from this, which would cover us then if price was to hit stop loss. Because we've partialed for 1 RR, we'd come out of break even if a stop loss was hit. If not, after we saw this, we can move stop loss to entry, because we know that this is actually a protected low in the scheme of things. I personally am actually waiting for this displacement first before looking to enter. I don't usually place trades on the euro to Australian dollar. I'm not sure if I even have it pinned on my trading MetaTrader, so I might have to get that sorted. Make sure to send through any questions, and as I usually say, if there's any markets anybody wants me to look through, and send it over. So it appears like we could have a displacement here. What have you got planned for the weekend? Now, I wish I had exciting stories here, but work is pretty much what we have planned. Got quite a few things to box off. Hopefully, have some time to relax and take some time to do side hobbies. But no, there is a lot of stuff that needs to get done. Sunday lounge, of course, yeah. I wish. Okay, so we've had that displacement, so confirmation that we are potentially going to run bullish from now. So let me look inside of this region where appears to want to get mitigated. So I'm going to view this region now as a demand zone, which I could potentially look to go long from. I'm going to argue that we could have a pending order here, because I don't believe that there's really anything else that's been left mitigated. I think this is arguably the best region to look at. I could be wrong, but this is just going to be my prediction as of right now. So I showed you how we could have tackled the market in here. And now as price continues to play, I will try to update you with other ways if they are delivered. Sunday sessions, yep, that is one of the things I have to get boxed off. So that will be exciting to do some more analysis. What time frame is this? This is the 15-second time frame. So every 15 seconds we are getting a new candle produced. In order to get this, you have to buy the TradingView Pro Plus plan, which is rather expensive, but it does help me to be able to go to those fractal timeframes. And it is crazy to think how much money TradingView will make, even though it is just this free platform where we can view the markets. The amount of people that I see that are established traders that have bought the premium plan, I can't remember off the top of my head how much it is, but I think it's like £400 every year. So potentially, like, I got it on a big sale. It was like a big Black Friday sale I got it on, but you know, potentially getting £30 a month from thousands and thousands of traders that use it, so they'll be making ridiculous amounts of money from this platform. Yeah, no, I do believe it's worth it, just because, as we see here, say we managed to get on this entry, which happened at 1:43. It's been 10 minutes since the trade was placed. Now, let me actually take... Oh God, it's not going to let me do it, is it? Why do we want the stop loss? 148,445. So already in 10 minutes, we are running 10 to 1 or 1 to 10 RR. And that is the best thing about these lower time frames. And if we can scalp on these time frames, as you've just seen there, I've showed you how we could have entered. It doesn't seem like price is giving us a big retracement to be able to get involved with, but had we been able to get involved in that, which we missed because we came back to the alert that was pinged quite late. However, as I stated, we were just running then 10 to 1 RR in 10 minutes. And that is the amazing thing about it. Yeah, Ryan, that's a very good point. It's difficult because in our head we're working with so many different time frames. So as we're doing our top down, we're having protected highs and lows on a range of different time frames, on a range of different structure we're looking at. So it can be very difficult to understand, and I will try to give an example of it. I just want to watch how this trade plays, and then what we will do. The reason I don't want to go and do it now is because it could take like 10 minutes to fully run through it, and I don't want to miss what happens with this. So if you just give me 5 minutes maybe, and then we'll go over and actually I'll tell you what I can do, which will just be easier, is I'll initially just use this drawn tool. So let's say that we are bearish, okay, and trading down. I thought I had the brush tool there, because this is an impulse retracement. Now, when we're viewing a higher time frame structure, we are seeing it as just a single impulse down or retracement. Now, if we were to view it lower, we'd be seeing this, where we're having multiple impulses, multiple retracements. Okay, so looking, did I play? No, I didn't place it, just because by the time we got to the market, I think price was like up here, so we'd already missed that entry, which is why I'm potentially looking for an entry in this region. I should probably update that because price is continuing to play out now. And now I'll go back to that example. Quite a nice sell to buy here with some market inefficiency above. I mean, just get that out of the way. It seems like we're getting some rejection now. So it could be ideal for us to now just see some form of retracement, which would give us an entry opportunity. Anyway, back to this. So on the higher time frame, we're seeing impulse, retracement, impulse, retracement, impulse. Now, what we're seeing is that we have so many displacements in the market. So as you see, in the scheme of this bearishness down, which is acting as an impulsive wave, we have a displacement at this level. Now, the reason why we need to do a top down is because we could view this displacement and then say, look, we've had a displacement, let's go long. Okay, so we could have this down there and just have our take profit at some imaginary level that we expect price to trade to because we've had a displacement. Now, had we not done a top down, we wouldn't have understood that because we've exceeded this low, this should be a protected high. And it's very unlikely that we're going to displace this protected high. Following structural laws, because we're bearish, we want to protect it. So we have to understand that when we have a displacement, is price displacing for us to be bullish, longer or shorter term? And because we know we're in bearish structure, we understand that because we've had this displacement, price is only bullish for a correctional wave, which should not exceed this level up here. Now, if we have a displacement like this, and what's happened here is because we broke this low, this has become a protected high. So we've now had this displacement. Now, because we've had this displacement, we understand that it's very likely now that price will go bullish and do something like this. However, we still not displaced this overall high. So technically, price can only be bullish anywhere beneath this protected high, because in a higher time frame scheme of things, this entire move here would look something like this. Impulse correction. So impulse down, correction back up. And price may only be trading back up with the purpose of mitigating a position somewhere in this region. Now, if we again take the assumption that because we've had this displacement, price is now going to trade bullish for days, weeks, months. But little do we know, if we had done a top down, we understand that price is more than likely just going to be bullish to this point. So now we might see price then trade like this, and then below low, and you're saying, well, why has that happened? Because price showed us the fact that it wants to be bullish after this displacement, or even after this displacement. So we're now thinking to ourselves, well, why has this happened? Because we've had displacements twice. Is that not confirmation that price is bullish for the foreseeable future? But there's always a higher time frame structure that price can be following. So like I was saying, in this region here, yes, we had the displacement of this. But that isn't confirmation that price is reversed in the zone, because price may only be bullish to trade us up into a demand zone, potentially a supply zone, sorry, not demand, a zone up in here. So following what we're saying here, where we've had price follow this structure, and yes, we've had that displacement, price may have only have been bullish to trade us into this region before then going lower. So we have to understand when we have a displacement, which is why we take partials. Well, yes, we've had the displacement, but could that displacement just be a correctional wave within the higher time frame scheme of things? So within this move, could that correctional wave just come up to here to follow this structure? We already know now that it hasn't, but because we've had that assumption, like I said, I would have looked to take a partial here, because that's a potential supply zone, given we were following this as an impulsive wave. So had we done our 3-box strategy without looking at this as a demand zone, we would have looked at that, highlighted both of these positions as points of interest, POI, again POI. So there is potential that yes, we are trading bullish, but we're only trading bullish for the purpose of mitigating one of these zones before going lower. So until we've had this displacement, now when we have that displacement, we then understand the price. Okay, we're then looking at this. Okay, text, not the brush tool. We're then looking at this as an impulse, this as a potential retracement. So we could say, right, where inside of this impulsive wave, let's get this tool out again, could we look to have a position that needs mitigating? Now, we may argue that is somewhere in this buy to sell. So we may then look to take a partial somewhere in this region or have our take profit here. However, the reason we've put our take profit above is because on an even higher time frame, we understand that price is bullish, and we want price to continue trading bullish until it exceeds, I can't remember what our bias was, yeah, this high, until it exceeds this high. So the reason why we can afford to have our take profit at or above this high is because in this time frame, or in the scheme of this structure, we're expecting price to have traded bullish from that region. So we're always following higher time frames, and the reason why I start on the monthly and work down is because in my head, although I may not fully explain it as I'm going down the time frames, in my head I'm constantly logging what price, or what I want price to do, and what my bias is for price, taking note of all of this structure. So this is bullish structure, and then zooming out again, this impulse, correction, and then this is going to be an impulse, is an even higher time frame scheme of things that we're watching. So we're always following higher time frame scheme structure. So we have to understand what that higher time frame structure is, so that when it comes to placing trades on the 5 second, we understand what the structure wants us to do on the daily, and then from that we can look to set our parameters and manage our trade accordingly. And that is exactly why a top down is so important. I hope that made sense. I know, again, I did run through that very, very quickly, but hopefully it made sense. I'm trying to figure out what is what with all this. Okay. We can now get rid of these. What would I need to see to be broken to go bearish? I would have to see this low get broken to go bearish. So let's just highlight this as 4 hour protected low. Our final target. Okay, so if price was to exceed the 4 hour final target, I would then move this level to here. But we haven't exceeded that final target yet, so we leave that down there. So this is the 4 hour structure. Let's now go to example the 15-minute structure. Okay. And what we're seeing is that inside of this structure, this should have been a protected high. So once we displaced that, this low right here becomes our 15-minute protected low. 15M protected low. And then inside of that, now we displace that, we can expect price, because we've had impulse correction, this potentially, sorry I just hit the mic there, hope that wasn't too loud, sorry I've just lost, or is that so, yeah, impulse correction, impulse, I would still have my final target here, so we don't have to always constantly keep changing the final target, but after we made that displacement, yeah, we were expecting price to trade up, retrace down to somewhere, and then at least exceed this level, however likely to be the one higher. And the reason this is the final target is because now we've displaced that, we're showing signs that price is wanting to run the liquidity highs, but I won't draw that on, because after that displacement, this again becomes a 15-minute final target as well, so we don't need to draw that on. Now let's go down to a 1 minute. Okay, we've had a take profit hit with this trade, so that is a 15-to-1 trade that we literally just watched play out in front of our eyes. And because we've now exceeded this high, okay, which was the final target, which was the 1 minute final target. Oh, what's happening there? Final target. Because we've exceeded that final target, this now becomes a 1 minute protected low. Okay, and then once we get signs of price reversing, we can then take the market high that it's set as the new final target. And then we could be looking inside of this at where do we expect price to want to trade down to. We have a sell to buy. So this is a potential demand zone. And then also potentially somewhere in this region down here. We have a sell to buy side of this. Move that to the bottom. We can get this out of the way because we've already mitigated that. So those are the two zones I'm now watching for in order for us to continue this structure. And then we could go down lower again and argue that because we've had impulse, retrace, impulse, we could argue that following the 5-second or the 15-second structure, this is, let's just say, the 5-second protected low. And we don't yet have a final target because price isn't reversed. Now, the second that we, or let's say we were to come and break this protected low, we're not going to then assume that price is just bearish for the time to come. If we were to protect this 5-second protected low, we then start working on the 1 minute protected low, and we can then say that, okay, because we've broken this, we can now expect this one to be held and expect price to reverse somewhere above this, which we have this demand zone. Now, if price was to break this 1 minute protected low, we then revert back to the 15-minute protected low, wherever that was. I believe it's all the way down here, yeah. So we then revert back to 15-minute protected low, so we can now expect that price is going to trade down to either mitigate this zone or reverse anywhere above this. So if we displace the 5-second protected low, we can go bearish and we can look to take sell positions with a take profit at this zone, because we know that once we exceeded this protected low, we're going to be bearish until at least this demand zone. If we break this 1 minute protected low, we can look to go bearish because we know we're going to be bearish until at least this demand zone. However, we know that overall we are still looking to go bullish. There's always opportunities to be on both sides of the market. And now we're actually on this time frame, I'm going to look to refine this zone. All of that has been mitigated apart from that zone right there. And then we can also look at this zone in here. I hope that makes sense. So once protected high is breaking, it creates a new protected low, yeah. Opportunities everywhere, yeah. This is the thing, and this is why, this is how the strategy is the same on every single time frame. We're doing the exact same thing. So when people look at me trading the 5-second and the 15-second, there's nothing different. I'm doing exactly what I would have done on the higher time frames. It's just that price moves quicker. Opportunities every day, day after day, literally. If you want to scalp, which it is harder than being a longer term swing trader. It does take time to get used to, but yeah, as you guys are saying, there is just opportunities to get involved in the market absolutely everywhere, and this is why it's important to create a bias, because I've just ran you through for the last 10 minutes I know exactly how I'm going to look to tackle the market, because I have these parameters and because I know about structural laws. I know that regardless of what happens in the market, I know exactly how I can tackle it, exactly how I can get involved, and which side of the market I want to be on. I reckon I got many tens of hours of flicking through the markets myself to have this light bulb completely click. Yeah. And this is what I was always saying to a friend of mine that I mentored for a while. a lot of trading is you'll just have like a light bulb moment or a eureka moment where something just makes sense, and this concept will just suddenly click in your mind and you suddenly understand it, and then everything just suddenly makes sense. You're saying, now I understand it. I hope I helped you to have that light bulb moment with structure, because this was the best light bulb moment I had, was understanding structure in this way. Hit the nail on the head as well about price. It's fractal, the same structure appears on all time frames. So many get so hung up on timers. Yeah, quite simply. And I remember somebody asked a question yesterday and just said to me, why are you viewing structure on the 2 hour and not the 1 hour? Because this person obviously must see everybody using the 1 hour and think that it's some godly time frame that we have to use to view structure. But every time frame is just showing a representation of data, and all we're doing is reading that data. There's no time frame that's better than the other. It is still representing data in some sort of way, and all we're doing is just reading that data. Now, what I think you did open my eyes to it, but I learned more through going through things. Yeah, no, 100% Ryan, and that's the thing, is that you can listen to me, you can listen to other smart money people, and I'm the exact same. It's not until you're in the market yourself, doing your own analysis, making your own discoveries, until things really do click. And I'd say that is the most important thing that helped me in learning, was watching a video or listening to somebody explain a concept or an idea, and straight away going into the market and trying to apply it yourself. And then once you've applied it yourself, seeing it happen in live time, it does then finally click. Now, I think what we're going to do is I'm just going to take a quick 5-minute break, just to go to the toilet, get another drink. So throughout that time, if I could just ask everybody to send in questions or any markets that you'd like us to analyse, in which case we can then have some content to go off for the remaining part of the stream. So I think I'm now going to move this as my 1-minute final target, just because fractally it seems like we have started breaking some lows. Seems as if supply has entered, so this is our new trading range. 1-minute final target, 1-minute protected low. We have 2 demand zones that we're looking for price to react from. Let's just shorten that down. Yeah, so these are the 2 zones we're looking at. I will leave this running whilst I'm away, just so we can see what price does. It's not guaranteed price will react to one of these zones, but this is just what my analysis and my strategy is telling me. As stated, we could, I'm not going to look to do, but we could, if price breaks this low, then look to go short. So if I give you an example of that, we see price break that low, and then we have, take this as an impulsive wave. Say we potentially have, I don't know, a supply zone in here. That line was not straight. My mouse sensitivity is so high, it's so hard to draw a straight line. We see price trade back in. We take a short position from this region down to the demand zone as our bias is for price to trade into that after breaking the 5-second protected low. And then we have our stop loss above, and then we still have a 7-to-1 RR trade, even though we're only following 5-second structure. So let me just get rid of all that. Loving the stream, mate. Smashed it there with Euro to Australian. I appreciate that. It's late for me. I'm off to bed. No problem, Ryan. Thank you for tuning in. I appreciate you coming in, asking questions, and helping us. But yeah, have a good night, and hopefully we will catch you tomorrow. Can Euro USD go down to 103? Yeah, we can take a look at that one. So, as I was stating, I'm just going to take a quick 5-minute break. Please don't go anywhere, because when I'm back, I will check on this Euro to US dollar market, and I will let you know what my bias is and what my thoughts are for price moving forward. So I'll just turn the music up. We'll go over to the Be Right Back screen, and then yeah, I'll come back and I will continue. So we'll just turn the camera off. turn the music up, and I will turn the mic off. Yeah, I'll be back in 5 minutes, so everybody sit tight, and we will continue with this very shortly. Okay, everybody, we are back. Let me get the camera back on. Yep, here we go. So, looking on the screen, seems like price did reverse the way that I thought. We are trading down, so that 1 minute final target is now relevant. We are now expecting price to exceed that at some point. Why is the music on very quiet all of a sudden? Let's skip it a bit. Apologies, let me just sort out the music 1 second. But yeah, we're back, and I believe somebody wanted me to go over the Euro to US dollar market, so we'll get that done. Okay, yeah, music's back. Everything should be good there. Is the music too loud? Yeah, it looks like it's too loud on the mixer. It's annoying because on this playlist I've got just some non-copyright music, you know, relaxed music. Each song has a different volume, so it's hard to gauge what we're doing. Hermes and Hestia, loving the stream. Did you manage to jump on? I didn't. We had an alert set for when price traded in, but we were looking at a different market, so we missed this entry. I think we were maybe like 2 minutes too late, but I did show everybody how we could have entered in on the market. And how we could have looked to profit from it. We'll have to come back to this market then and see what happens with it, but for now, let's check out what Euro to US dollar is doing. This was another trade that I was saying we could have looked to take, which we did in live time, because we had price tap into a higher time frame supply zone, and after doing so, we saw a distribution, displacement, mitigation, and then a continuation lower. And then the NFP came out, and you see on the minute that the NFP came out, price blew up. However, in doing so, it didn't just end at some random spot. Price actually came up to tap into and mitigate the other supply zone that we had highlighted. But from there, this is definitely not relaxed music. Sorry about that. And then we come to break the low, so break of structure, which means that we have a new protected high up here, arguing that we have unmitigated positions. To be honest, it seems like everything's mitigated except that one region that it appears to have already reacted to. Just because everything up here, you see the wicks tap into, so this was a last buy to sell, but then this wick comes into, this wick mitigates that, but then nothing comes back up to mitigate this region, POI. So it seems like price, let's just look on a 15-second potentially. Yeah, okay, that is the zone right there, this buy candle. Which price tapped into, we've had a displacement. Displacement's been delivered. Where are we wanting to see get mitigated? It's tough to say. I would have said this candle, but it appears like price isn't ready to reverse. We'll have to watch that, but it seems the way that price action is delivering, and we've not had too much rejection from this zone, could be a sign that we're not yet ready to reverse here. If not, we could then expect price to run bullish. The other point I could make is that you can see the two regions we wanted to partial at. We did so for good reasons, because as I stated, this could have acted as a demand zone where we see prices perfectly tapped into, which is why we would have partialed at this region as well. It appears that price is, this is potentially where I have drawn out the zone wrong, whereas the zone maybe should have been this buy to sell, which could just be my error. So if price reverses from here, that is my error there for not actually identifying that one. Yeah, it seems like that is correct with the volatility that's been added since the tap. But either way, even if we got involved when price tapped into this, our stop loss would have been above this high. So even if it does reverse now, we still would have been protected because we would have had a stop loss reflecting this protected high. But again, we'll just wait to see what happens. In the scheme of things, this entire move here is the distribution or the third box that we need to see. So what we can look for is we can wait to see if price now displaces this low. If it displaces this low, we can then look for a reaction or a retest back up, but we need that displacement first. Honestly, helped me so much these last 3 days. I've learned a lot. Very glad to hear. I've been trying to include as much information as possible and give as many learning points as possible on top of that. So it seems that just price action here. I'm not liking price for a sell at the moment. If we got in on a pending order here, very well, because we would have looked partial there and we could have profited. But with what price is doing currently, I don't like the fact that there's still too much demand in the market. It seems like, yes, we have tried to follow the bias I had, where we tapped into sort of a region. I obviously identified that first, whichever zone we identified. We introduced a lot of supply afterwards. We had inducement momentum injected, so a nice distribution started playing out here. But it seems like there's just too much demand in this market for that move to happen, which is the case. Market isn't always going to follow the analysis or the laws we're looking at, because if there is too much demand in the market, like stated, it just cannot make that move. Okay, sorry, yeah. So 10.341, which is all the way. Okay, that's a lot lower. It's hard to tell if it'll go all the way down to 10. Where even is 10.341? Okay, that is very, very far from where price is now. I'm assuming you have a reasoning for price to want to go 10.341. So assuming your bias here is you're expecting price to exceed this low here, as I believe from my higher time frame analysis, we were arguing that it is the final target. Yeah, because we came to mitigate buy to sell. After doing so, we've started trading. Yeah, it seems that following structural laws, the final target longer term is for price to exceed that. However, that doesn't mean price is going to continue trading bearish from right now until it exceeds that. We could have a wider scheme retracement before that move happens. So be aware of that and be alert of it. But to follow your other question, today's price action, as I stated, I was expecting price to go bearish from here. So obviously we had this lower time frame bearishness which got validated, which became bullishness to traders up to this point where we've reacted to. So arguably we are still technically bearish until these highs are broken. If these highs are broken, we look to go bullish. If these highs are protected and we start to run the liquidity lows again, we're looking to go bearish. At the moment we're at a pivotal point in the market where the bias is slightly unconfirmed, so it's hard to answer that question until we have something to reconfirm the bias. Okay. Right, so that's that. Let's check Euro to Australian dollar. We could argue that we want to see price mitigate something in here. However, I believe when I went to the 15 second, I was arguing that it seems, yeah, it does seem as if everything in that region has been mitigated already. So the fact that price has disregarded this here makes it somewhat likely that price could potentially, just as I said that, I'm spotting a buy to sell between those two wicks that could, no, it blew through that one, so I doubt that's a zone. Thank you very much, appreciate it, got it. it's called. Yeah, my name is James, but we did have someone called Ryan in here before. I think that's why I didn't clock it at first, because I thought you were speaking to Ryan Williams in the chat. But no need to apologise. It's all good. It's really helpful. Much appreciated you sharing your knowledge. Yeah, not a problem at all. Glad I can answer your question. And don't feel bad about the names. I'm the same. It's hard to keep up with it. Anyway, I'm going to let that market play out from now and just decide what it's doing. Let's go back to the Euro Australian just to see how that's been playing out. Sort of just consolidating at the moment. No real outlook on what price is doing. Is there any other markets to look at? I don't want to do that. The dollar yen. Let's go into the 15-minute just so we can get a broader view. Wow, when did this happen? There we go again. The NFP perfectly brought price down to mitigate the zone we highlighted at the start of the stream, and has since reversed higher and appears to be going to reach the final target. So another position that we drew on, which has played out. And just to sort of explain why, because this is an impulsive wave. Inside of this impulsive wave, that was the main position that I believe needs to be mitigated. This as well, this sell candle was another one, but by the time we saw this, price had already displaced that sell candle. So this was the other region that we were looking at. As I said, yeah, the NFP release perfectly brought price down into that region before trading higher. So even though fundamentals can send the market wild, they don't always do so sporadically. Sometimes it will bring price into regions and points of interest that we were looking at anyway. And thank you to everybody who has voted in the poll. It seems we've had 14 votes, 13 of which have said this is amazing. So I appreciate that a lot. So yeah, another opportunity here that I outlined at the start of the stream, which has played out. Obviously, the tough part about this being the fact that because it was on the NFP, finding entry confirmation. You know what, actually, in saying that, I think I've just spotted a way that we could have been involved. Because this right here should have been a protected high. We broke that protected high. And then as we broke that protected high, we could have taken... I mean, this is arguably the last sell candle, so unless we can get a better refinement on the 5 second, I would say we have a buy up, and then from this point is the real last sell down. It doesn't seem like price fully tapped, so potentially we wouldn't have been able to get involved in that, but the refined position is this, the unrefined position being this, but we'll keep it refined. See how price played from here, if it lets me. No, we didn't quite get a tap because I refined the zone too much, but if we hadn't refined the zone, we would have got a tap from there. So I was about to say, even though we had the NFP, it probably would have been hard to find entry confirmation, but we've just gone down and we found a way that we could have found confirmation. We displaced the high, traded back down into the last sell to buy, and then we took off higher. So that was a way that we could have been involved. Move the chair up. So there is that. And it appears that price is likely now going to trade us up to the final target. If anybody has any more questions or any markets you want me to take a look at, then once again, make sure to send them through. Let's take another look at any other potential markets we could look at. What are we on here? The pound to the yen. I believe that at the moment this is an unconfirmed point, so I'm staying away from that until it gives me a more confirmed bias. Same with this market, currently rather unconfirmed, so I'm avoiding trading it. This market appears appears to have exceeded the final target already. I wanted price to trade us up into this point of interest before exceeding the final target, because it has left that position now unmitigated. However, it didn't do that. I was looking at this now as a point of interest that we would look for price to react to. Let's go to 15-minute just so we can review price better. So price has somewhat invalidated this zone. Not fully, it could trade up to mitigate it later on. But as of right now, it appears to have done that. Price seems to be struggling to make any moves lower, so it could be the case that we are accumulating here and we'll start trading up to potentially mitigate this zone. Pound to dollar, nothing crazy that we're seeing. Obviously, dollar yen, we've had some brilliant opportunities. This one that we went over yesterday, and then the trade that I left you all with, and then this demand zone that I said I wanted to see price react from, which it did do, and has since traded upwards. Okay, so yeah, that poll ended. We had 14 votes, 13 of which, as we stated, thought that it was amazing. Another poll in here. What are your favourite time sessions to trade? New York, London, Tokyo, or Sydney? Very good question. I think for me, personally, I prefer trading the New York session, just because I believe that's where we get a lot of volatility. However, all of these sessions are definitely valid. I think the open of the New York session is a very good time to look to trade, around 1 PM. My sort of hot spot for trading is like 12 till 5 PM, 12 till 6. That's sort of the region that I believe is ideal for me, and I've had the most success with. Got an itchy face. More coffee. Okay. SPX is grinding down towards 405. So S&P, do you mean? Yeah, the S&P 500. I believe we went over that, but yeah, I agree. It does seem like it is going bearish. I get the feeling we actually did some analysis on it. Potentially not this market. It might have been a different. Which one was it that we were looking at? I think I typed in US 500, didn't I? It's probably this one. Yeah. Okay, well, our analysis didn't play out. This was actually the analysis we did yesterday. It seems like price didn't react to the zone, and this is actually quite a valid thing, because this is what I was saying to some people as the reason why I don't like to trade these markets, is because it rarely follows my strategy, rarely follows the laws that it should, just because it's influenced too heavily by fundamentals, because it's something that people heavily invest into. The second either confidence or worry is brought into the US dollar or into the world, then people will just pull out, and it will affect the market massively. Bitcoin, another market we included yesterday, and I was showing potential ways we could look to get involved. I was saying we tapped into this overall point of interest. We then had the displacement, which confirmed that we were going bearish, and then I wanted to tap into this to go short. Unfortunately, we didn't have enough demand left in the market to trade us back up. However, since then, price has literally traded 32 to 1 within a day, which is absolutely crazy. So we're 50-50 currently. 2 people have said the New York session and 2 have said the London session. So we've got a bit of a battle there. I think I would have to go with the New York session if I had to pick one. However, I would say the overlap between New York and London is definitely the best time. So obviously GMT time, that is 12 p.m. till 4 p.m. For anyone in New York, that is pretty much straight at the start of the session where you're going to get the most volatility. But yeah. I don't think there's anything else here. I remember oil disregarding our analysis the other day as well. Let's check back on euro to Australian dollar. See what's happened here. It's actually exceeded the final target, so it appears it didn't react in our zone and instead reacted to this sell to buy. Just strange, but it is what it is. Oh, it does seem that price is struggling to make any moves higher, so we could be in stall for a higher time frame scheme retracement, which may come down to this. Okay, we've had a good 90 minutes here of live analysis and live trading. I've provided a few opportunities today. Obviously, the Euro Australian dollar, an opportunity that I was looking at. One disclaimer I am going to have to make though is that I am not advising or telling anyone to take any of the trades I'm looking to take on this stream. We have to understand that trading carries risk, and that 80 to 90% of everyone that trades the financial market does lose money. So when you are watching these streams and you're watching me analyze, you're watching me look at potential entries, understand that that is just my analysis, that is my bias on the market. I am not some god. Trading does carry risk, and I am always factoring in that risk with correct risk management, and make sure, as I have done, you spend a lot of time learning and practicing before ever taking any live funds into the market, because as we stated, trading does carry a lot of risk. It says a pinned comment. What's this? That's why it's good having you here to run us through it. Yeah, that's exactly it. And to anyone, if you're not already, look in the description of this live stream and get yourself involved in our learning lounge, because once you're in there, you can gain some free PDFs, one of which runs through everything there is to know about the basics of Forex, and the next one runs you through risk management, what that is, why it's so crucial, and what we can do with it. Anybody who is new in here, make sure to say hello or ask any question that you feel like asking, or if there's any markets you want us to take a look at, just drop them down in the chat and we can head over and take a look at them. I'm curious now to also see what Euro to US dollar has done. Okay, it seems like it could break this low. This is unusual, as there's no real position that I saw price coming to mitigate higher up. However, this does happen sometimes. Price isn't always going to follow our analysis, hence why we state that trading carries risk, because no matter how good your strategy may be, we're working with probability, and no strategy is anywhere near 100% right all of the time. So everybody new in here, welcome in. Hope you are enjoying this. We are sort of wrapping up to the later part of the stream, potentially another 20 to 30 minutes left. Throughout the stream, we've done quite a lot of analysis of markets and currency pairs that people have requested me to do analysis of. Also, a nice few lessons in here about structure, about how we understand when displacements are valid, about how timeframes represent structure. We've also had some very nice positions play out that we were looking at. Going back to the dollar yen, just to see what's happening in here. Potentially seeing this in here. as an unmitigated position that we would like to see get mitigated on the off chance that price trades us down, and we mitigate the position. Okay, so it seems like not many people have any questions left, or any bit of knowledge that they would like me to share. So we may look at wrapping this up soon. It seems like the majority of people have gained what they needed to from this stream. I think we've gone through the majority of the market that people wanted us to. Let us actually have a look right now at this, just to see what's happening with it. And this will be a nice point for us, because if price does break through this, it's either going to mitigate something down here. If it breaks this low, we know that we might start to disregard the higher time frame bullishness. Thank you for your time, James. Bless you. I appreciate that a lot. I do enjoy doing these live streams. I do enjoy helping people out, and making sure that with all the bad misconceptions that are around Forex out there, that people are getting the right information and understanding what Forex is really about. Because I believe there's too many people, teams out there that shine a bad light on this industry and this avenue, which is tough for the rest of us, because it affects all of us pretty much. So hopefully we're able to put those misconceptions right and show you what Forex is really all about. Seems like price has the desire to potentially disregard this zone, just the fact that we have traded down into it with such high supply in the market. Not a lot of rejection in the zone, nor have we created a lot of liquidity beneath. So not fully ideal. Doesn't mean it won't play out, doesn't mean it doesn't reverse in this zone. It's just not as ideal as it could be. And 15 likes now on the stream, so thank you to everybody who has tuned in and has pressed that like button. It's a good gauge for us to see if people are enjoying it, and if so, that's great. Koto, thank you for streaming again, mate. Really appreciate it. Of course. Hoping to make these quite a regular thing, so if that is something you'd like to see, make sure to let us know. And on top of that, make sure you get yourselves in, asking questions, just because this is a brilliant opportunity for you to have one-on-one time with us, which is great, because majority of people are going to make you pay for one-on-one sessions, but these live streams give you the opportunity to get the knowledge you need absolutely free of charge. So make sure to take advantage of it. I'm quite liking the look of this in terms of reversal. I want to see this high get broken, and then we'll start looking for the man zones to potentially buy from. But patience is going to be a virtue here. Okay, yeah, we've broken that high, so now quite simply hoping to see price now retrace somewhere into this region, I'd say, arguably. If so, look to go long with a stop loss just below, and a take profit all the way up at the previous high in the market, which would represent this. Okay, we've just had the tap. Maybe we come deeper, who knows, we'll see. Here we go. I really enjoyed it and managed to profit from Euro to Australia. I'm glad that people are managing to profit. But again, the disclaimer that I am not advising anyone to take these trades. It's completely your choice to do so, and understand the risk that is involved when you do, or if you do, ever place anything. Just a suggestion, why can't you make this live session every GMT time in the morning around 8 to 9 a.m. so we can have a day plan, chosen pairs. What is it you mean by that? So, like, start the stream early, do our analysis, say what we want to see for the day, and then what, come back later on to like update how it all is? Is that what you mean by that? And also just an update, we could have looked to get involved here following our analysis. Let's see how price plays. Maybe it follows it, maybe it doesn't. Yes, okay, right. No, I understand that. That could be a good idea. Which is why the people in our VIP chat do have a bit of an edge, because that's pretty much what they get. Before we do these live sessions, we usually will send through analysis to them and stuff like that, and then what will happen is we'll come back in these live streams, update things. So the VIP chat is a very good place to be in my eyes. Okay, so this isn't very good to see. We've seen a lot of rejection now, a lot of supply being introduced into the market, so we could get a stop loss hit here with the way that price is trading. I'm quite interested. I think at one point I'm going to go back over one of these streams and try to figure out how many RR return we've made from the things I've been looking at. Yeah, just as stated, I'm quite confident that price will come to hit SL here, as we have done, just because literally the second I saw price have this rejection, I knew that this trade wasn't going to play out. There's just not enough volatility and not enough demand that has been introduced from this zone for that trade to play out. And if you remember correctly, I was very hesitant at the start. We still followed our strategy, structural laws. I was fairly hesitant at the beginning just because price traded into the zone with too much supply in the first place, and then didn't reverse with enough demand. So that's okay. I obviously didn't take this trade, as you would have seen. I didn't go onto my phone to place it, as I wasn't 100% confident, but I still made the prediction, which hasn't come through. So now that we have traded through this, as I said, there's a slight chance we might have something in here to react to. I think that's fairly unlikely. I think what's happening here is evident by the fact that we have so much rejection to the upside. We may want to see a wider scheme reversal all the way down to here to potentially find some zones that need mitigating lower. Which, if we do displace this low, that is when we'll then start looking inside of this region for positions that we can look to potentially buy from. But if then price comes down to invalidate this, we can then start to look to be a longer term seller. Quick update on to Euro USD. Yeah, this market is sort of ranging at the moment. Not something I'm looking to trade. It seems like there is actually a lot of volatility that's being introduced. Is there any more? I don't believe there is, but is there any more fundamentals to come out today? It's glitching. Yeah, so we have the Ivy Purchasing Managers Index coming from Canada, although I can't imagine that to have a broad impact. But as we saw on this market, so a dollar quote, price is shot down with high volatility, and a dollar base market has shot down with high volatility. A dollar quote market has shot up with high volatility. So it seems like at the moment the market is very volatile. This is why usually we suggest to not trade on the first Friday of every month because of the NFP. I haven't actually placed any of the trades I've been looking at today as a result of that, just because there is the chance that stuff like this happens in the market when we've had news release and whatnot. So we have to be careful around these days, the NFP days, because the markets can tend to be unusual and unfamiliar. But I've already shown you today that there are still opportunities that you can profit from. So there's that. If you just give me one moment. Okay. And what is a good thing to see is I am also in a chat with some other brilliant smart money concept traders, and the position that we were looking at around here is a position that they have also just forwarded. So it's always a good sign if you're looking and trying to get involved in the same positions as some of the top people in the game, then you know you're doing something correct. So they were looking at this zone as well to take sales from, and as I stated, I believe, did we go down into this? If not, I'll actually show you how we could have got involved if we go to a 15 second. So pretty much, give me one moment. We see obviously that price has traded us up into here, and after we've had this, we've moved back up, mitigated this position, so this buy to sell. Straight afterwards, there's a POI. And then after doing so, we see that this right here, because we break that high, this becomes a protected low. Straight after that, we displace the protected low. So displacement. And then after doing so, we have, evident by the wicks, a buy to sell region in here that we could have looked to have a pending order on. Price perfectly taps into that. And then I believe, I don't think a stop loss would have been hit, but let's double check that. So we could have had a pending order, either a stop loss above these highs if we wanted to be more lenient, if not a stop loss right here. Take profit down at the previous low, and let's just see if price would have played out. Yep, there we go. We would have had a take profit hit, 11 to 1. Now, this is where you do just need to spend a couple of hours to yourself in the markets. Obviously, when I'm streaming, it's hard for me to just sit on the 5 second and watch the markets and try and take itchy shoulder. I don't know why, I've just had my my hand here because it's warm. My hand's quite cold, so I'm trying to warm it up on my shoulder. But yeah, I was just thinking that because sometimes I forget that there is a camera on, and then I kind of be sat here like this, and I'll look back up like, crap, yeah, everybody's gonna think I'm a right weirdo. Where was I at? I've just forgot where I was at as well. So thank you, LAGFX, for making me lose where I was at. Yeah, it's hard for me to just sit here and literally just take marks because I have to be really focused in the zone. I have to have everything out ready, my logbook, my journal for trades, as well as MetaTrader open and all of this. So that's why I've not really been placing any of the trades that I'm showing, more just trying to show you how I'm looking to tackle the markets. But I just thought I'd try to show you how we could have got involved in that trade there, and how we would have had a take profit hit there for an 11 to 1 off the back of the NFP release. So although we avoid trading NFP, there are still some opportunities that can be capitalized on. I did not mean to close trading view. So that's just a nice insight. And as I said, there is a chat I'm in with a smart money concept trader who is also looking to potentially take sales from the same region. So as I said, it's always nice if you're looking at similar things to some other great people in the game. But yeah, I think from now the markets are sort of slowing down, giving us unconfirmed biases. I'm not really liking the look of it, so I personally would usually take this time now to potentially just sort of have a break from the markets. We've had a good couple hours looking at them, looking for opportunities. There's no need to get too involved and try to overtrade. It's definitely not something you want to get involved with. So yeah, I think we'll look to round this up now. I said it would probably be another 20 to 30 minutes, and that has happened. So I think we'll round it up. I hope everybody has enjoyed the third trading session now. And to anybody who is watching this that potentially isn't already affiliated with us or has just stumbled across these videos or these streams, always look in the description to get involved with our other socials. We're giving so many updates on these socials. The Learning Lounge is definitely the place to be, a completely free Telegram group chat where we provide a lot of updates with the business, daily fundamental news, daily analysis, potential entry points. A lot of stuff goes into that. So if you're not already, go into the description, get involved in the Learning Lounge and stay up to date with us and what LAGFX is doing. But regardless, I think we're going to wrap this up now. If there's any final questions or anything you want to ask before we do so, then let me know. Euro USD blue. Yes, it did. We were just actually looking at selling opportunities in the market from both of these zones, because this was a 15-minute point of interest that was mitigated. We had a distribution, we had the displacement. After that displacement, these were the two zones we're looking at. We had a reaction from the first, which we got involved with, managed to take one partial, price continued, and then when the NFP came out, we got blown through. But the NFP news release actually perfectly traded us up to this last buy to sell to mitigate that. We then went down into a 5 and 15 second time frame to view this structure, and we found that there were opportunities to enter in on this 11 to 1 trade, which ended up playing out to this final target. We then started looking for more sell opportunities. That hasn't played out. The market's been playing quite funny recently, so I said I'm just going to sort of round up the stream now, because the markets aren't looking very tradable. We had a good couple hours now looking through. We can do one final update on the euro to the Australian dollar, which is a market somebody asked us to analyze when we were looking at an opportunity that we would manage to capitalize on, a 15 to 1 there. And we were looking for further things. Unfortunately, price never quite tapped this demand zone before making its move higher, but that is just what happens. Dollar yen, again, another market we're looking for potential opportunities on. We set this demand zone sort of at the start of the stream, and the NFP news again perfectly tapped into that before trading higher. So another opportunity that I was looking at that played out quite nicely. This market has been providing us with some very nice opportunities. It was this one we found, I believe, on the first day of the stream, or maybe the second, I can't remember which. And then there was an opportunity inside of here with a 1.2 pip stop loss that we managed to find yesterday, just before end of stream. So there we have it. Let's round things up. As I said, if there's any final questions, get them sent through now before we round this up. And thank you to everybody who has voted in the polls and liked this video. It just helps us get out there. So anyone who hasn't liked the stream already, it's highly appreciated if you can do that for us. Now, it doesn't appear like we have any questions remaining, so I appreciate everybody for watching this, whether you're watching it live or you're watching it back on the YouTube. I hope you've managed to learn a lot from this. And if you have any questions that you haven't been able to ask me in the session, then make sure to message me directly, whether that be on Instagram, Telegram, whichever avenue that may be. But regardless, we're going to wrap this up. So thank you everybody who has stick through. I know most people that were in sort of popped in for half an hour, but they have other ties because it is the middle of the day. But yeah, anybody who is still here, thank you for watching, and we will see you next week throughout the weekdays, where we will look to do more of these live sessions.